Hello, YouTube. Oh my goodness, is there volatility? There is downside volatility, there is upside volatility, and what we want to know today is these bulls are 100% flexing in the short term, but how high can we really go? That's what we're going to talk about today. And what I really noticed is some notable action that I have not seen without manipulation. I'm talking about an actual massive gap up, like 2.5%. We come back down, fill the gap, and then we bounce up to form a hammer. And then in after hours, Netflix delivered. We talked about that on the weekend. And what's really interesting is just that we finally got a legitimate gap fill and the bounce, which is exactly what we would have expected. So on this daily chart now, it's looking a lot more constructive. So if we now go back to the levels we were looking at yesterday, I talked about the green line, the pink line, the white line, and the red line. Where are we now? Well, we're all the way up here over the red line at 371.04. We closed over that by 4 cents, and now we're over it by $2 in after hours at 373. These bulls, they want to take us higher. And what's so interesting about this too is that when we look here to our weekly chart on SPY, let me actually go to the correct one here. Where is it? Here we go, SPY 1 week. What's really interesting is just that we now, with the dark pool print yesterday, when we look at this weekly candle, like I mentioned, we have a big pivot off our 200 weekly. Yesterday, we talked about how if we're able to continue the momentum, we have a chance to go a lot higher. There's one more level I want to talk about. Actually, two more levels. Last week's high is 370.26. So if we're going to back test again tomorrow, I would not want to see us lose that area because it means that previous resistance is still resistance. We held it on a close, and I want to see us continue higher. There's one more area after this, which is so important to me. We've talked about this yearly chart before, but I don't think a lot of people actually zoom out to remind themselves why this matters. In 2020, our close is 373.88. So if we're able to hold the area we're at right now, roughly 373, 374 into a weekly close, that would mean that we're looking pretty good. And then back above 378.46, we're back above the 2020 high, and we're back over the 2021 open at 375. So that's going to be very, very important to me. And what's so important as well is just that when we look here to SPY, it's actually powering up without tech. So what I still am not seeing, which is a must for me, is leadership from tech. And the reason I say that is because when we look here at the percent gains, QQQ is up by 0.8. S&P is up by 1.17. And this is really important for me because when I look here to QQQ on the same chart, it's actually below its red line. It's not as strong. It's not as powerful. It's not as majestic. So it's basically still at its 200 weekly here. It's now back above in after hours. It also filled this gap, but it didn't bounce within 50 cents of filling the gap. It actually went all the way down to the closing price yesterday. So it actually means that it needed to backtest a little bit more. But the fact that we bounced and the fact we're going higher is very constructive. We're now actually breaking our pattern. And for the first time ever since we started our massive funnel going back to August, we have 1, 2, 3, 4 daily closes over the downtrend. We have not done that ever since we started this leg down here. So that is very, very, very notable. If we now go over here to SPY, we can note that, same thing. We got, actually, no. We got one day back below, 1 day above, and another day above. So this is still technically not 4 or 3 days above the downtrend, but it's getting constructive. Let's look and see what happens tomorrow. What I'm really going to pay attention to next is going to be the fear and greed. So fear and greed is actually back into fear. We were at 18 a week ago, and we're almost 100% higher from that now. So from 18 to 28 to 34, boom, boom, boom. These bulls want us higher. And it's no surprise going into Opex, we're going to review the options chain in a moment. And what's so important for me is that as we continue to go higher, I want to see us go up the risk spectrum, which means people are not extremely fearful or feel fearful. I'd like to see us get closer to neutral. God forbid we go into greed. Why? Because it means that people are getting less worried as we climb the wall of worry. That's what it's called. So as we continue to go higher, 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 people generally find more things to worry about. Today, there were a lot of headlines. We're not going to focus on those. We're going to focus on the price action. So looking here to Netflix, Netflix delivered a crush across the board, added 2.41 million subs. Kabam, kabam, kabam. That is a big move, right? Woof. We look here to our EPS, 311 over 213. That's a big beat, revenue beat. And we were only looking for about 1 million subscribers to get added. They added 2.41. If you look here to Netflix now, oh my goodness, right? Last time I checked, it was up like 8. Now it's up 15. If this cannot drag the Nasdaq higher, I do not know what will. So when we were looking here at Netflix on the weekly chart, what was so important is just that again, if you go back to the weekend video, which will be queued up in a moment, we saw a basing pattern. It's up 4 in the week, but as of right now, it's going to be up by about 20% of the week. Finally, the stock is going up. And as we look forward to Tesla for tomorrow, what I also need to see is constructive price action. So far, we've got a higher high and a higher low, but we have a dominant head and shoulders pattern here. So I really want to see Tesla power up, just like we're seeing with Netflix. And that's because I need to see the NASDAQ actually go a lot higher. If we look here to our QQQ chart, what do we note? Well, on our daily chart, we noted that we are right around that 200 DMA, but the more important area is going to be our negative 30 and our downtrend. What do we hit? Hit the downtrend and rejected, right? Stopped. The bears slammed it. So when we look at our high here, our high is 277.21. That is within $2 of getting to our negative 30, but not quite there. It's right at the downtrend. So I want to see Tesla and Netflix power up and drag us higher because we need to chew through all of this red volume here. Also, what's really going to be important for me is going to be what happens with the dollar, with yields, but also with risk appetite. So when I look here too, what happened to the dollar, it's basically flat, starting to go sideways or down. We note that VIX is also down. We note that 2-year note is down. And we also have the 10-year note down. All red on the day, all red on the week. What I don't love to see in terms of risk is that Bitcoin stalling out. I really want to see Bitcoin catch a bid because this is the ultimate risk asset. And the fact that it's stalling out, it's not a red flag. I would call it more of a yellow flag. Oil, gold, Bitcoin, Ethereum, all down. So what does it mean? Well, we'll probably find out soon. Finally, what I want to look at, because it is going to be payday on Friday. We got, I believe, about $4 trillion in notional value expiring. And what's so important is going to be that VIX is still at 30, and there's going to be a max pain area. So looking here too, the options chain for the 19th, which is going to be tomorrow. When I look here at areas, oh my goodness, is it getting busy? This 375, it's gushing. There's a 250,000 volume here. I want to see what converts. It's also 370. And on the put side, these bears are relentless. They do not want to give up. So 370 appears like max pain for tomorrow. Let's see what happens. Also, when I look here at the, where did we close out? 371. We closed out 371, so 370.96. And I'm looking at the money call. So at the money call, or this one right here, which is going to be the 371, still has about $3 attached, which means that we got to be at 374 for them to get their money back. And there's a lot of interest here. This is not only important for tomorrow, it is important for Friday. And it's important for Friday because that's when we got monthly Opex, and that is when we're going to get paid or not get paid. When we look here to October 21st, what's so interesting here is that there is a lot of volume here at 375 call. And what do they have for volume? For premium. $3.13. That 378 or 2020 high level we just talked about is what these guys think we're going to be at by the close on Friday. I'd also note that they're attempting to burn all the prem for the puts from 375 down to 370, down to 365 and below. There is a ton of money to get smoked. Last thing I want to look at here is what we talked about yesterday, where there could be a turning point for us to go higher. What I'm talking about specifically is the stocks that are above their 50-day moving average on the S&P, and we see an increase of 57% versus the previous day, noting that this is delayed by 1 day, but every previous time, like 2011, 2016, 2018, 2020, early 2022, that is what all leads. When these go higher, the market goes up. It goes big booms. Looking at the 200 DMA, up by about 21%, should be higher for tomorrow, and also looking at those areas where we carve out the bottom. So with that said, I want to thank you so much for watching. There'll be a video that queues up here in a moment with the weekend deep dive. Otherwise, I wish you all the best of luck into the rest of the trading week, and I look forward to seeing you tomorrow. Thank you.